Hi everybody, I'm Steve McDonald. This is your 2-minute retirement solution that's going to be longer than 2 minutes today because our guest is Evan Balaga. He's a retirement coach and a 33-year veteran of the insurance business, and he's here to talk about the one thing the numbers indicate none of us want to look at, and the one topic almost everybody asks for in our retirement coaching series, long-term care insurance. Welcome, Evan.
Welcome. Thank you very much, Steve.
It's my pleasure to have you. You're in Hawaii, is that correct?
I am. I split my time between my home in Washington, D.C. and Hawaii.
Oh, that's lovely. Let's start with this. Can you give us a couple of numbers about long-term care, like average daily costs for inpatient, how long the average stay is, percentage of us that can expect to require that sort of care, those sorts of things?
Well, the shocking numbers are, we could just quote a MetLife U.S. News and World Report, just that the semi-private room rate in a nursing home is costing $222 a day.
And that's semi-private?
That's a semi-private. That's $81,000 a year. For a private room, the rate jumps to an average of $248 a day to more than $90,000 a year.
Wow. How long does the average person expect to have care if they do?
Good question, Steve. Several years ago, probably 5 to 10 years ago, the average was just under 3.2 years in a formal nursing home.
Right.
But what's happening is we're all quite aware that we're living longer and longer. When I started in the business in 1982, it was great fortune if people lived past the age of 80.
Right.
Now it's no surprise most of us have friends and family that are well into their 90s.
Yeah.
People are living much longer with more debilitating chronic illnesses.
Right.
And that's extending our stay in a care facility at one level or another.
Yeah, sometimes I wonder if that's a good thing, living as long as we are. But let me throw a curve to you. I didn't buy long-term care insurance when I was 50. I looked into it very seriously. I got a couple of quotes. And the fact was it was just really expensive, and it wasn't just the expense, but if I didn't use it, my heirs got nothing back, zero. And it was a lot of money, 6 times the annual cost of my car insurance, as I remember, about $120,000 in premiums if I lived to age 85. Now, I'm hearing rumors about new plans and new programs that are addressing this issue. Can you talk about it?
Sure, love to, Steve. Thanks. Yeah, there's been a great revolution in the life insurance, long-term care insurance industry to start combining benefits. The average premium just for a 55-year-old married husband and wife with a stripped-down basic benefit for $200 a day that would pay for up to 5 years is going to cost in premium close to $4,500 a year. So if they live for 20 years, they've spent $90,000, and a good chance they've never actually used that benefit between the ages of 55 and 75. The advent of this need seems to come a little later in life.
Right.
Although shockingly, up to 45% of the long-term care claims have historically come from people under age 65. So it's not just the old age problem that we've come to expect it to be. Well, what's happening is they're starting to combine benefits. So the life insurance company, some of the more progressive ones on certain types of policy, allow you to buy a single benefit. Let's say you buy a $250,000 benefit. In the event that you died, of course, that $250,000 would pay tax-free to any family member or named beneficiary.
So essentially it's a life insurance policy, correct?
That is a life insurance policy.
Okay.
However, they've also now created an opportunity, and the IRS has gone along with this, where you can draw out up to the full benefit of the policy in the event that you trigger it using a long-term care formula. If you cannot do 2 out of your 6 activities of daily living, which is exactly the trigger on a long-term care policy, you are now entitled to draw up to $10,000 per month tax-free from this, for example, I used $250,000 death benefit until you've completely used up the benefit, in which case then the policy just expires.
So you get about 2.5 years from $250,000 ballpark in benefits, or about a little over 2 years. But the question is, what's that cost? I mean, how does that compare to just one of the old-style long-term care policies?
The premium I just used for that 55-year-old, if they went, a husband and wife bought a conventional long-term care policy that was worth about $360,000 cumulative benefits, if they were able to use them and exhaust them, that premium would be close to $4,500 on just long-term care premiums.
Right.
They could accomplish the same thing buying a combination policy for just a slightly larger premium of $5,000 a year, but that would be a guaranteed benefit that would provide $360,000 each in the event they died, or in the event they needed to access any of that money for a long-term care or disability benefit.
And their heirs still get the lump sum death benefit if they don't use it.
Exactly. So it pays a guaranteed
Now that
benefit
makes
at
sense.
death. Whatever is not used for long-term care at the death of the insured, the balance gets paid as a tax-free death benefit.
Here's my last question, because I know my folks are going to be asking this. At what point, or how much money does a person have to set aside to not buy a policy, but if they have the cash, how much do they have to set aside to cover themselves? I know there's got to be a break-even point somewhere.
Yes and no. It does take a number of years to justify the premium on the claim side, which is why the life insurance component is so attractive, because it pays a certain benefit.
You get something back.
Guaranteed, because death is 100% certain.
Yes, it is.
Less than 20% of long-term care policies ever get actually used. So the other 80% is going away, wasted premium.
Right. That was my big objection to the whole thing.
And as you can see by the grids that I have posted, the older you are before you buy your long-term care coverage, the more you're going to spend
Right.
for premium.
Right.
A woman is 60% more expensive to buy long-term care insurance just compared to a male.
Is that because they live longer?
That's because they live longer. Women tend to take care of the men, so the men are fine when they're married. And
Right.
if you're a woman, you typically don't have a husband later in years, because women do live longer, or you're not real comfortable with your husband taking care of you.
Okay, let me stop you there. It looks like we're going to have you back. I don't want to go too long because we lose too many people. But let me ask you, Evan, would you be willing to take emails from our members with questions on the topic?
I'd be happy to. My email address I can give you right now, if that would help.
So, you know what? We'll just run it at the bottom of the screen when this comes out. It'll be there for those folks to write down. So we're definitely going to have you back, because I think we need to talk about more of this. And unless you have a lot of cash you can afford to pay out for long-term care, inpatient or in-home, this insurance is something that we all have to look at. None of us, I'm sure, want to be a burden to our children with this kind of a financial load. So if you don't know exactly when you're going to check out of this race for the most toys and under what circumstances is the tough part, I'd take a look at long-term care coverage. Evan, we'll run your email on the screen now. Let me thank you so much. I definitely want to get you back, if that's okay.
Thank you so much, Steve. I appreciate the time.
It's my pleasure. And before I go, a quick commercial. The IU conference is in St. Pete this year. If you've never attended, it's one of the best things we do all year, and it's well worth your time. All of the Oxford Club editors are going to be there. I'll be there, and lots of other experts from the money business. And I got to be honest with you, meeting our members and getting to know them at this meeting is one of the best parts of my job. So I hope to see you there. Click on the link below for all the details. Evan, thank you again. And for everybody here at what is supposed to be a 2-minute retirement solution, but I think you'll agree with me, it's worth running over this week. Thanks so much for being a part of us, and I'll see you next week.